Hello, my name is Michael Ryan and welcome to the second episode of the Leaders Interview with Michael Ryan. I hope you enjoyed the previous session with Karen Young of Hayes telling her charity corporate social responsibility story. It's still available on YouTube and it's still available on Spotify to listen to. Today I'm joined by Jason Cobine, who's the CEO of Cobine Carmelson, and he's an insurance expert. And he's here today to tackle the biggest topic of the day, which is the recession, and his 3 top tips as to how the insurance industry can address that. Jason, would you like to introduce yourself to our viewers?
Yeah, thanks, Michael. Jason Cobine, founded Cobine Carmelson 13 years ago, and we haven't looked back. We're typically helping directors who really actually want to protect their business. They want claims paid rather than just documents that they stick in a corner.
Very good, very good. And you've actually been my insurance broker since I set up as an independent consultant about 10 years ago.
Yeah.
You recently appeared in Finance Transformation magazine with a fantastic article about insuring for cyber attacks. Would you like to tell the viewers a little bit about that?
Well, very briefly on cyber, it's not the traditional type of insurance where insurers offer you money to solve things. They're more providing services, and I think what people were really enlightened about in that respective article was they get services, they get help, they get immediate assistance, which people just didn't realise. They thought it was a traditional type of insurance applied to a digital product, but other way around, that really different insurance services and immediate assistance, which is what people really need when their computers aren't working.
Yeah. One of the interesting points in the article was the fact that potential hackers look to see whether companies actually do or don't have insurance.
Well, that's a theory. I mean, unfortunately, data theft does happen. So what sort of data are people stealing? Well, they might be stealing data that isn't worth anything, or they might be stealing data that tells them that people have got insurance or they haven't. So it's a bit of a grey area. No one knows everything about what hackers are doing, but we do know that they're not messing about. They're criminal organisations that change up every single day. They learn so quickly.
Yeah, it's certainly evolving all right. And certainly, so you would definitely recommend we should have insurance against cyber attack?
Well, I think the main thing I would recommend is that people investigate it. Because you might not be able to get it if you haven't got good quality IT security protocols in place. And then you might learn, okay, well, if I devote my next 12 months IT budget to improving that, then I'll be able to protect myself in future. So no one would want to desperately need it for a contract and find out they can't get it. So it's definitely worth looking into. And, you know, a very, very famous CEO who had a massive cyber breach on her watch, Dido Harding. It was Talk many years ago. I actually bumped into her at a conference and asked her, you know, cyber security, what was going on? And she said, oh, yeah, you know, it blindsided us. It took us completely by surprise. And I said, well, in terms of cyber insurance, I understand you didn't have any. Any particular reason? He said, yeah, we thought it was really expensive. And I said, oh, right, how much? How much was the quotation? She said, oh, we didn't get a quote. We just thought it was really expensive.
We just assumed.
So investigate it, look into it. Try and get a quote, find out how much it will cost. I don't know anyone that said it's too expensive because it dwarfs the cost of the issue that we'd have to face. Never. So it's got to be looked at. Don't put it on the to-do list, not on the too difficult list. No one will forgive you if you've just ignored it.
Very good. And would you be able to provide some perspective, I'd say, on the typical insurance cost against cyber attack for, say, a medium-sized company?
Too difficult. Because what companies do brilliantly is make themselves different, do things differently from their competitors, and employ different people, better people who've got different skills than their competitors, and then they call their insurance people and say, we're exactly the same as everyone else. We have no more risk than everyone else, which just can't be true. So, you know, people spend their time making their businesses different, and those differences are things to celebrate. But they'll change their risk factors.
Right.
So a completely digital business with no offices is a much different risk factor to another SMA business that has stayed in the offices. So that's why we say look into it. It's nothing to be afraid of. No one's going to tell you off for not having this particular piece of cybersecurity in place if you didn't know it existed and didn't know it'd be useful. But you might actually get some useful assistance in terms of, okay, well, this is what your risk factors are and these are ways to reduce it.
Okay, all right, very good. So when we had a chat last week as to whether you'd like to come on the podcast as the second guest, we were discussing whether, based on all the experience you have and the constant interactions you have in the market, what your top tips would be that people should be looking out for, either from a corporate perspective or indeed from an individual perspective, as we go into what is obviously a pretty harsh winter.
Okay, well, I'll do the individual perspective first, because I think individuals can often buy insurance and literally never look at it. At least when companies buy insurance, or sometimes it's for a contractual purpose. Someone requires them to have £10 million of cover, which is a huge amount of insurance. But if it's required for a contract and you want the contract, you're probably going to invest in that. But individuals who buy home insurance, etc., they rarely check it. They rarely look at it. They tend to renew year after year. Now, I'm not saying they should change providers, but I'm saying they should check whether the amounts that they're insured for are still correct. We've seen a huge increase in the cost of labour and materials in this country over the last 18 months, if not more. And let's not discuss the reasons, let's just discuss the facts. I think it was September when the amount of insurance you would need on your home was 17% higher than it was the same time last year.
Okay.
So imagine if you've got a home that in theory would cost $200,000 to rebuild, then you're now looking for £234,000 of insurance. So it's those sort of things that should be taken into account. People should look at their insurance, review it. Not only might they need to change it to make it more accurate, but they might need to reduce it. They might have bought too much. A lot of people, when they first purchased their home insurance, they said, well, the home's valued at $750,000. That's how much insurance I need. When very rarely is a home that would cost $750,000 to buy, especially in cities, very rarely would that home actually cost $750,000 to rebuild. The gap is shrinking, but I think people should definitely look into that. And there are loads of tools out there. So there are tools, we give our clients access to a couple of desktop surveys, so they can go to the Royal Institute of Chartered Surveyors, use a discount code, and just check how much they should be insuring their buildings for. Because if you do need £234,000 of cover, this is not the right time to only have $200,000 available to you. It's incredibly important that you don't get really caught short as an individual, as well as when you're running a business.
Right, so really, even from my own perspective, I should be looking at what the household insurance is at the moment, whether it's still applicable to when I bought the house, and indeed whether I should be shopping around for a new provider.
And even look at your current insurance documents, because a lot of insurers, they do increase these amounts once a year to try and keep pace with inflation. But if you're looking at it and it doesn't look right, there are ways to check it that are not expensive and won't cost you the £34,000 that you're underinsured by.
And what kind of ways of checking it are we talking about?
So we have access to a portal which gives us a discount code. So we've invested in this and white labelled it for our clients. So we send them a link, they go on a website, they put in a discount code. It's £20 off. It's not going to change the world, but it's lower than they would find it by themselves. And it allows them to put bits of information in about the size of their home, how many bedrooms they've got, and it will give them a figure back. So it's just a double check. And at least by doing that, if something does happen in the future where an insurance surveyor has come to visit you to assess the damage and says it looks like you were slightly underinsured, at least you've invested time in getting a report where you can say to them, well, I don't think I am, because here's the report from the Royal Institute of Chartered Surveyors. So it's about managing your risk, making sure that you're not buying too much, but also you're not buying too little. Okay.
And the link to that, they can actually get to that through your website, can they?
Yes. So
CobineCarmelson.com, is it?
www.CobineCarmelson.com. If you type property insurance, we've put a nice little search box on there which finds it. Makes it easy for me to find the things that we've put up there. And if you search for property, there'll be 2 or 3 blogs, because we talk about underinsurance quite a lot. We know it's a big challenge in the UK, so we talk about it quite a lot. And in there, they'll find the links. So it's all there.
Okay. Just before we move off the personal side of things and home insurance, I'm actually based back home in Dublin at the moment, and we had an electrical storm nearly 2 weeks ago. And every television in the estate got blown out. I think anybody who didn't have a surge protector on their plugs got blown out. But one person, and as I've never encountered this in my life, their house actually got struck by lightning. And I've always believed, and I'm sure most of the viewers do too, that lightning is an act of God. Mm-hmm. Is there insurance for the fact if your house is hit by lightning and obviously damaged, they had a hole punched through the top story of their 3-story house?
Yes, in short, yes. So I wouldn't expect any home insurance to exclude lightning.
Okay.
I mean, they would cover fire, lightnings and explosions as a bare minimum. Mm-hmm. So when premises are left empty, if you've got tenants and there's a void in the tenancy and you haven't had tenants for a couple of months or you're renovating, then insurers tend to reduce cover and take out things like leaks because they're going to get even worse when the premises is left empty, unless you've got someone inspecting it. But they still give you the minimum of the fire and the lightning cover because they are the two catastrophes that no one can really predict or recover from. And no one wants to... Insurance is also about helping people, so no one wants to think I have to put out this fire and injure myself because I haven't got insurance. So I'd say the bare minimum is fire and lightning. Other things, it depends on the insurer. You just have to look at the documents and see what they're offering, which is, I'll say that a lot today, and we know people don't look at their insurance documents. We know they don't. We know we have to accept that fact. We can encourage them to do it. We can try and tell them or produce, as insurance companies have over the years, try to produce, in theory, documents that are easier to read. But people just don't read their insurance documents. And we try and help them interpret what the documents actually mean. But if you picked them up, they wouldn't be as dry a read as some people think. There's some interesting things you'll find in there that actually can provide huge benefits. So in nearly every insurance policy these days are helplines because insurers don't want you to have problems. They want you to be able to phone someone and say, this is going wrong, what can I do about it? But no one knows about those because they haven't opened their documents. But they provide huge benefits. One of them I'll allude to will segue us nicely into business, Michael, which is counselling. Health and safety law in the UK, everyone thinks it doesn't apply to them, but it applies to nearly everyone. Even if you don't have a big business, you've still got a responsibility towards your staff. And one of the things health and safety law wants you to do is provide access to confidential counselling. And nearly all office insurance policies, no matter whether they're big or small, provide these helplines. So within your office insurance is something that helps you tick another box that is a box that's only going to get bigger over time. The way the world is going, people are going to need more counselling, more people to speak to, and it's becoming less of an issue. It's not such a taboo now. So people can find these things in their insurance policies, put them on the staff notice board and say, here, you've got confidential counselling, courtesy of us. Ticks a health and safety box. It's a great corporate and social responsibility thing to do. And it will also provide a benefit to someone who didn't know where to turn and suddenly sees that information is available to them.
Okay, I never would have thought of that. Actually, to be honest, it's true, because I've actually had my health insurance as well as the home insurance come through recently, and I'm as guilty as the next person. If I'm only paying a regular premium of, let's say, €100 or something, I have a tendency to put the envelope to one side and go, right, okay, I know they've sent me the documents. I'll never read them because they're about this thick, and I'll just make sure the direct debit goes out once a month. But there's nuggets within the documents. So even if we stop the podcast at this stage and actually just looked straight at the viewers and went, when's actually the last time you opened your insurance documents on a personal basis, either for the home, the car, your medical insurance, and actually took the time to read them? Because I'd actually hands up and go, I don't. I just accept that they've been paid, and I'm missing out here as a result of that.
Most people tell us they don't. We don't expect them to. We want them to. But we end up helping them interpret what they mean. Yeah. So everyone's busy. No one's sitting there waiting for the phone to ring. Everyone's busy. They're doing things. They've got a lot of things on. Lives have changed immensely over the last few years. Some people have managed to change their work-life balance, but they're still busy because they might be doing more things for their family than they were previously. But they're still busy. So the time to fit things in that might help us is really tough. So we appreciate people don't read them. We recommend that they do. We urge them to, and we tell them the benefit is you'll find stuff in there that's really useful. But the challenge is when they open a PDF and it says page 1 of 71, that is off-putting. That's like, death by PowerPoint. When you go on the webinar and it says slide 1 of 200, you're just like, no, thank you. And if you think of 71 pages, who's got time to read 71 pages? Not really. If we pick up our book and we're in a nice place and we're relaxing, we might, motor through 200 pages. But that's because it's interesting. But the insurance documentation, it doesn't exactly lend itself to people taking it on. But there are bits and pieces. And, sometimes it's a matter of maybe ask someone that supplied you with the insurance, what are the key takeaways that I should definitely not miss here?
Yes, that's a fair point.
There are things that should definitely not be missed.
Between opening the documents, making sure we read them, actually asking the insurance broker who arranged them for us, can you give us the key takeaways? Because with the best will in the world, we're not going to read 70 pages of whatever. But one of the things you mentioned there, and actually it's represented by the office you're sat in at the moment, we've obviously gone through tremendous change in the last 2 years. And I use my home as an office. I just move from one room to the next according to who's in the house. But from an insurance perspective, people who've created home offices as separate little units, maybe in the back garden, is there a need to extend the insurance, make sure the house insurance covers what is generally for most people a separate or almost like a little minor mobile office in the back garden?
Again, it's a matter of checking. So you could find, lots of home insurance policies cater for the fact that people work from home. Some of them are more generous than others. Some of them will cover not only the office that you've built, but all the computers within it. And some will even cover you if you have visitors. But if not, there are working from home policies which can fit quite nicely between your home and your house, especially if some people want to keep them separate. They say, well, this was built by the business, it has to be insured by the business. So again, it is a matter of review. And this is going to be my number one takeaway. If everyone doesn't remember anything, there's 3 things I want them to remember. The first thing is review. The second is concentrate on business continuity. And the third is swap covers for what's necessary. So in terms of review, if people have started working from home, they should review their home insurance. However, if the laptop that they're using is owned by the business, then the business needs to check whether their insurance covers that laptop when it's at their employees' homes. And we've had some insurers that are very good with this, and we've had some that have asked us for a list of names and addresses for all these employees, which then we had to ask permission because we were then providing private information and GDPR. So some insurers make it easier than others, and we have had clients who have moved from one insurer to another because their insurer was making it too difficult and saying, well, if you want to insure 40 laptops, we need to know the addresses where they all are. And that was an incredible task in itself. So we moved to another insurer who said, we don't mind where they are as long as they're only in the UK. And other insurers will cover you for international travel, etc., etc. So I think what businesses need to do is review their insurance. Not just because everything has changed, but because they might be doing more digitally than they ever did before. And therefore there might be parts of their insurance that they don't need anymore, but they might be able to boost the digital side of their insurance to take account of exactly what they're doing now. And there is a horrible feeling about insurance that it always goes up. But things that aren't reviewed will go up. So if you don't take the time to read your meters, whether it's water or gas or electric, your service provider will probably be creeping up over a number of years without you knowing. So we all know every now and then we read the meter, we check the tariff that we're on, and now it's even more important to do that. And I'd say with your insurance, it's a similar scenario. They give you a once a year chance. When they remind you that your insurance is due for renewal, it's a good idea to review it then and say, why are we still insuring offices when we haven't got an office? Why haven't we covered our laptops? They were safe when we were in one building and they were there all the night and we had security alarms and we had security guys. But now we might need to widen the cover to take account that they're going to different addresses. But if you think about this, insurance companies, you can put a good negotiation with them. You can actually compare different parts of their cover and enlighten them and say, look, I want to do it this way. So when you're saying there used to be 100 laptops in this one building, so you insured them for £100,000 because they're £1,000 each. And if that building had caught fire, there would be a £100,000 claim. Now we've got 100 laptops in 100 different locations. If there is a fire in one location, you only lose £1,000, Mr. or Mrs. Insurer. So the risk is spread. So it's a better risk. So you can actually achieve lower premiums by saying this is what we're doing. And that's just one example of how the digital changes can actually benefit you. You're not reviewing your insurance to make it go up. You're reviewing your insurance to make it more appropriate.
Mm-hmm. That's very good. See, this is the real reason why I invited you on. I've known, for the benefit of the viewers and listeners, Jason for the last 10 years. He has insured my business, plus he's also insured several of the ventures that have spun off from that. And what I find fascinating is it's the thought process. It never would have occurred to me that if you go from a situation of having 100 laptops in one location and you think as business owner secure and insured, and then I dissipate that and distribute that into 100 homes, and your thought process moves to being capable of reducing my premium. Now, I never would have thought of that. So that's actually, it's a mindset shift. It's interesting.
It's about trying to understand what's needed and what's necessary. So if something isn't needed or necessary or useful anymore, we can dispense with it. At the same time, the second point I'm going to talk about is business continuity is more critical than it's ever been. Like I said, we are all busy. I don't know anyone that's waiting for the phone to ring. People are always doing things, so it's tough to get their time. But equally, that means that we're always on. And we're always on digitally. So the digital revolution is something that should be taken into account because businesses are not totally, but enormously dependent on tech and digital stuff. So that same example area where that company no longer has 100 laptops or computers as it used to have in an office and it used to have servers in the corner. So the risk is different. Now it has people working from home using the cloud. The difficulty is people are the weakest link. And if you had great security at that building and you had a really robust commercial Wi-Fi system that offered you a network and all the things that made it very easy for people to communicate, you've probably tried to replicate that at people's homes, but we don't know what quality of Wi-Fi they're using. We don't know what websites their children are going on to play certain games. And we know that people, you know, the Internet of Things, where your toaster has got a microchip in it, these things talk to each other. So there can be some weak links, and there are just some tips as you're going through the process of saying to an insurer, well, these people work from home, and they say, well, have you tried this? Have you checked that? Have you tried the other? That are really easy to implement, but can save an awful lot of disruption. Disruption is the problem. When something goes wrong, it's the disruption as well as the money to solve it that causes the problem. Because if you've got 100 staff, we may be using a bad example here, you might only have 20, and they can't do anything, then that is incredibly difficult to manage. Because those people will want to do their work, they'll be frustrated they can't do it, the clients might be getting frustrated as well. So it's the disruption that we think is the key part to what's termed as business interruption by the insurance community. So it should be thinking about, okay, what are the three key things that are going to hurt my business today? Is it the telecoms not working? Is it the internet going down? Or is it our data being unavailable to us? And if you realise, that is a risk, then the old type of business interruption that you purchased, which would pay loss of profit, can be swapped out for something that provides you with immediate digital assistance to get back on, get a new website up if that's what you need, get some new domains, and get going again.
Okay, that's pretty important. There's so much in what you've just said there, which my mind was racing as I was listening to you. But in essence, the first lesson is read the documents, whether you're a person or whether you're a company. Review and read. And actually, one of the most important things you pointed out there is not be afraid to approach somebody like yourself. Go look up Cobine Carmelson as a website and go into the portal.
Not just us. So there are thousands of good brokers up and down this country. Thousands of them. They give good advice. We meet them. They're great people. You know, we're on committees with them, etc. And they're always willing to give advice. but they do have a lot of experience because their phone is not ringing all the time from people saying, I want to buy insurance. Their phone sometimes rings to people saying, I've got a real problem. And that knowledge of what other businesses has gone through is a huge resource for you if you're calling to say, what do I need to think about? They've got so many examples and they can really help.
That's actually key, because you and I had a conversation, I think, back in March when I had an approach for somebody to buy Finance Transformation Magazine, the whole reason why we've ended up with the podcast here today. And it was your thought process as to how you came at it, which just blew my mind. And really and truly what you've just said there, the fact that insurance brokers, to be honest with you, are not necessarily, it wouldn't have been my initial first port of call in looking for any form of business advice. But since, as you say yourself, you're not engaged 8 hours a day, every day of the week in selling insurance, you're giving advice in response to questions which are particular to individual companies and individual circumstances. So you're creating a wealth of knowledge, a bank of knowledge, which, to be honest, when then applied to certain circumstances is just priceless. So, I mean, I've always found it, like, over the last 9 or 10 years since we first, and actually, I think we should point out, we've never met in person, have we?
I don't remember. I reckon I would remember because I know that you're pretty memorable, but I don't think we ever did. And
I think we'll have to wait. We'll have to wait on the Chelsea United game at Old Trafford.
Yeah, well, I'm more than happy to wait for that.
But this is one of the key reasons I invited John. It was the thought process. So people aren't listening to this or watching this and sitting at home and thinking to themselves, I should have reviewed my documents. I just put that away because it's too difficult. But then the next step on from that, actually I should just pass it to an expert and ask them for the key takeaway. Yeah. So I'm actually missing out on a resource here who experiences all of the potential what-if questions from businesses up and down the country. As you say yourself, right across the insurance broker network, not just you as an example. And kicking around some of the challenges that we face as either small businesses or indeed large businesses is worth exploring, because it's the thought process and mindset that you bring, which I find is this is the real reason why I think you are such an invaluable part of my own network, and one of the reasons I thought you had so much to teach people. But just to bring you back into some of the business continuity stuff, for example, because I wouldn't have thought of it from the point of view of business disruption and the loss associated with it and what the insurer could help me do to get back up and running so quickly. I thought that was very, very useful. But it made me think of something that one of my other business partners, Mark Saywell, pointed out to me. He says, if you're going to work from home, make sure you have a VPN. Make sure the VPN is turned on your laptop. And I'm like most people, I put the hands up and I went, where's the VPN? What does it stand for? And I did it and I put it in as part of the McAfee software.
Exactly.
But the other thing he told me, which was near critical and I had never thought of, and I don't know what your opinion of this is, he says nobody ever changes the password of the Wi-Fi that the provider gives them. And if you change that, that's gold dust.
Yeah.
Obviously, don't forget it.
No, but it is. And it's not necessarily something you could do as easily as changing the password on your phone, but it's definitely doable. I mean, I remember how to do it. You go on that special page, we use BT, and you go in and it comes up on a website and you change it. Yeah. But yeah, that they are two huge risk reduction factors. If you change the password on your Wi-Fi and only 0.5% of people have, then it would be. When and if people who are miscreants get hold of, the passwords that were applied to these machines when they left the factory, then you're not going to be affected. If you're using a VPN, then you're protecting the business data, if that's what you're using a VPN for, from the prying eyes that are getting in when the kids are playing some game. Yeah. Because we do have to be vigilant, and unfortunately we don't want to be vigilant, because a lot of the time we're looking at things and going, I don't really want to think about that. It's like advertising. There's some advertising on television that's so painful to watch, people sort of just can't look at it, especially when it's certain charities. So there are certain instances people think, no, I don't really want to think about that. Yeah. So they just switch off. But as they were going through, if they were thinking about data and insurance for data, that would be one of the things that is mentioned. It's, have you encrypted your data? Is it encrypted when you're sending it to other people?
Yeah.
Is your phone encrypted? Is your laptop encrypted? When I left my phone on the train, stupidly, a few months ago, I was absolutely delighted that I could just go to Samsung.com and go, where's my phone, switch it off. But I couldn't do that if I hadn't pressed the right buttons in the first place.
Yeah.
So there are lots of key takeaways that reduce a risk perspective enormously with simple matters. It's very difficult for a company to say to its employees, we want you to go and change the password on your Wi-Fi router, but if you do and half of them change it, that's a massive improvement in risk reduction, and also it will benefit them personally enormously because it makes their own mini world more secure. At the same time though, not every business is digital in that sense. So if you have a business that makes things, I like talking about breweries, so we'll mention them. Their risk is not necessarily that their salesperson's laptop won't work when they're in a meeting. It's more that the people that supply one of the 3 or 4 key ingredients that they actually need are going to come unstuck. They're going to have a digital problem. It could be at their manufacturing or processing plant, 600 miles away. It could be abroad in terms of some of the ingredients in brewing. But if they have a problem, that's your supply chain. If you then might need to switch supply to someone else, but there's a reason you're using the initial supplier in the first place. So it could cost you more. It could be more awkward. It might not make sense for your deliveries or your schedule. So because we're all so digitally collected these days, my third tip is, not just swap your own insurance for digital insurances, but ask your suppliers, what have they purchased? Have they purchased insurance? Leave it an open question. When they say what type of insurance, you just say, well, just send me evidence of your insurance. And we as brokers, we're writing letters for our clients every day to third parties who are interested in what sort of protection they've got and how resilient they're going to be. Because if your supply chain isn't resilient, then neither are you.
Very true. Very true. Yeah. Okay. I hadn't thought about it from that perspective. There is an awful lot. I've noticed it myself. I took on an awful lot of new suppliers as part of creating Finance Transformation magazine, and I go through their supplier take-on process, whereas normally it's not something I engage in on a regular basis. And so obviously the ESG requirements mean that what it takes in order to take on a supplier at the moment is you get a list as long as you're armed to fill in and comply with and say, you're perfectly well-rounded company and all the rest of it. But that's an interesting one. I hadn't actually been asked what type of insurances I've got, what they call outside of the standard stuff, what kind of liability insurance I have.
It's a good credibility check. How seriously do they take their business? How seriously do they take threats? Are they aware of what the threats are to their business? Yeah. And I'm not saying that you would be able to read through their insurance documents. They're probably only going to send you a one-page summary. But if you sent that to your broker, they would say, okay, well, these aren't the best insurances in the world, but they're not the worst either. But it would allow you to go, okay, so my supply chain is thinking strategically about digital, and they want to stay up and running, so I've got some comfort in that. I think this definitely happens at the higher end, where local authorities are appointing people to do work. They ask them to submit details of their insurance. Universities, I don't think they'll work for anyone anymore, or appoint anyone who doesn't have cyber insurance. Because they know their data is so high risk, that people are going to be after it. So they don't want any weak links. They're pushing the weak links out of their situations. So they'll be picking suppliers based on the quality of their insurance cover. It won't be the only thing they're looking at, but it's definitely becoming something that the C-suite have to have on the list. They have to have it on there. They have to check.
And I actually think it's fair to say, and again, one of the reasons why I selected you to do this is I don't think from an awful lot of the finance leaders that I speak to on a regular basis, that insurance is sufficiently high up the agenda in the thought process.
Yeah.
Generally, I find it's something that's become the responsibility of the company secretarial type role. And it's not on the immediate playing field in front of a CFO, when actually it should be for all sorts of reasons that are going on at the moment.
Well, it's a cost. Unfortunately, when you see something as a cost, it will always be something that you don't want to pay too much attention to. You don't feel great about it when you're talking about it. It's often a hard sell.
Yeah.
Yet, when it's turned on its head and said, okay, so what are the risks? What can we do to prevent them actually materialising? And what do you need, apart from just money and documents, when these issues are actually unfolding?
Yeah.
You know, and insurance has been a duress purchase since we all bought our first car, and the insurance was much more than the car, and we were really annoyed because we'd worked so hard to get our first car, and then the insurance milked us for everything we were worth. You can't get that out of your head. That will just be insurance is expensive. Insurance, it will live with you for the rest of your life. And I've heard finance directors who I've spoken to who've said, yeah, you're right. I've always felt it was an expensive necessity that I had to have. When we talk to people about reviewing their insurance and changing old insurances for new, they're often shocked that so much of their policy is optional because they were told you need this. It was a hard sell. And no one wants that, so you probably don't want to deal with 3 or 4 or 5 different insurance brokers. You stick to what's been recommended. But I would say you need to speak to someone who's been recommended by others. You know, out of all, you know, don't just pick someone that you're not sure of. Ask your peers, who do they talk to? Who gives them the best advice? And then they'll get someone who they can get on with, who might not do the hard sell, but they can concentrate on what are the issues you're going to face instead of these are the insurances everyone else buys, which doesn't work anymore.
Okay, we've about 5 or 6 minutes left, and there's 2 questions I want to ask you. There's one I want to clarify for myself. Finance Transformation magazine in the Q3 edition covered the potential power cuts that affect all businesses, not just the finance departments, and what contingency business continuity plans are in place across the winter. And I think already it's now come to pass that there will most likely be power cuts at some stage in the UK towards the tail end of January, early February.
Okay.
Is there anything from an insurance perspective that companies in the first instance should be looking at with regards to that? If it was, for example, to completely kill a key process they have to do.
Okay, so knowing that the answer is no, insurance is not going to help, is key information.
Okay,
so
good.
Unexpected power cuts are covered. So the traditional hard sell of the builder who's digging up the hole outside in the street is going to hit a cable that will turn your systems off, which is why you need this insurance, still applies. If someone does manage to hit a cable, it's going to go down. Usually that's localized. But what isn't covered is when you get the letter from the water board saying, next Thursday we're going to turn the water off because we've got to fix something. And these are going to be the latter. These are going to be the power supplies, the infrastructure supplies, turning things off to preserve what's left. So there is no insurance that's going to help for this. There could be at the global level, but we're not talking about that. So now it's a matter of resilience. So there are lots of things that can be done, but you are going to have to start thinking about it now. So there are water tankers if your business relies on water. You can hire electric generators if your business is reliant on electric. Now, it's not great because they're probably run on diesel, which isn't great for the environment. But if you need to do something, you might need to go and hire one of these. And you might need to get in early before other people who have left it too late.
That's a very good point.
So it's a matter of thinking. Remember I said earlier, what are the 3 key things your business needs to survive? Is it telecoms? Okay. Telecoms network might go down. You can probably use mobile or VoIP, so maybe have access to both, so you can move from one to the other when necessary. With electricity, it's a matter of getting mobile power, something that's going to help you when the rest of the the grid isn't working. Gas is a little bit more difficult, but there are less and less businesses that are reliant on gas. But having said that, there is a CO2 problem over the last 18 months where there wasn't enough CO2 in this country because of a problem in another country.
Yeah.
And there was a serious CO2 shortage. So the price of CO2 went through the roof. So these shortages we've been experiencing over the large 18 months, but probably as individual businesses or individual sectors. So it's a matter of resilience. What is it you're going to need? Try and find it now. Book it in advance so that you've locked it in. And it's not going to look pretty if you've got a generator sitting on your forecourt when you don't usually, but it's going to save your life.
Yeah, that's a very fair point. Again, some of the stuff you've said as we've gone through this is worth repeating as we come to the close of this. But it's one thing for us all, and we're guilty of it as project managers. We can have a business continuity plan, and for as long as I've been in work, and I started off with Whipbread the Brewers, we always had business continuity plans. We had disaster recovery sites. But really and truly, if the power is going to go, it's not just a question of having the plan. It's actually a question of making sure you've booked what you need before everybody else books what they need.
Disaster recovery is always about that, because if you imagine if the disaster is big enough, so when we used to tell people, okay, you've got 200 people in this office, you think 5 of them could work from home, and that was normally the C-suite, but you're going to need 195 desks. That's fine. You can probably negotiate with someone who will love to see you when you need 195 desks for a short period because your block has been taken out. But if a whole building has been taken out, it's going to be a large thing. It's not going to be just one building. It's going to be an area. If we think back to terrorist atrocities, certain areas, St Mary's Axe, Canary Wharf, they were all large areas that were affected. So when everyone is ringing and saying, I need 195 seats, those 195 seats are not as easy to find. So it is a matter of dry run. So you don't have to send everyone home, but if you've got a business continuity plan or a disaster recovery plan, you have to do a dry run. The same as if you've got a backup for your data, you have to put that backup into another system and see if it works. Mm-hmm. Because if your systems are down, that backup is going to have to be resilient. It's going to have to work. We know that lots of people. One of the first cyber claims I saw was an architect's practice who thought they had everything backed up on Google Drive, and when a customer from 5 years ago came back and said, I want another extension, rather than start from scratch, they thought we'd get the old files out, and they found that 72% of their files were corrupted, and it cost £240,000 to reinstate that data. And that was because a backup hadn't been checked. So whatever you think your disaster recovery plan is or business continuity plan, it has to be tested. It's not as big as it sounds. You're not throwing everyone out of buildings. You're just sitting around a table, maybe with someone like me, maybe not, saying, okay, let's see what happens when we actually try and do this number one thing on the button. And what you find, like every plan, as soon as you get into contact, the plan has to change. And that will happen when you dry run your disaster recovery plan or your business continuity plan. And it will also happen on the day when you need it. But because you've had a dry run before, you'll know, okay, these are the sort of things we did last time to make it work.
Okay, all right. There's very good stuff in there. And actually, I think the key thing coming out of it for me is that you just had the dog join you, have you?
No, I just had someone else who wants to speak to me.
Oh, okay. Well, we're almost done. We've done a few minutes. There's one other thing I want to cover off. Dust down the business recovery plans. Actually put them into effect. Actually test them. Actually see if they work and refine them before it's too late. Which actually, to be honest with you, can be judged as being mid-January. I had one last question for you. You're like myself. You're old enough to remember Drop the Dead Donkey on ITV, I'm sure, the comedy program which was set in the newsroom.
Yep.
The second love of my life is above my head here, which is Manchester United, and I noticed that you've got Chelsea in the top left-hand corner of yourself. The current scenario as of today between Ronaldo and Man United, what's your take on that from an insurance perspective? I heard on the car news, just as I was coming back to the house earlier, that United may cancel Ronaldo's contract.
Yeah.
From an insurance perspective, give us your take.
Well, this is an interesting one because it's what we call employment practices. It's around breach of contract and who's doing what. And I would say the club have certainly got a case of gross misconduct.
Okay.
So in theory, they will try and use that to get out of paying him his contract. But he's also got a case of I've been discriminated against. Now it might.
On what basis?
Well, this is what he's saying. He's saying something like, "I've been treated differently. I wasn't told the truth." So that's going to be really difficult to interpret because I'm not sure whether Mr. Ten Hag would have taken meeting notes when they were having that cosy little chat about how often he'd play. But it does show you that when things are going wrong, this is where people are the risk. So people are always the weakest link. So people can embarrass you, make you look silly, press the wrong buttons, and they're not. We're not likely to admit it when we do that stuff. We have to, we have to know that the culture is going to look after us. So it's really interesting how this is, so many lights are shining in on this to see what's going to happen. But it's nothing that hasn't happened before. He's just a bigger story.
Yes.
And it's one of the, how can we put it, more controversial interviewers that's managing to do the PR for him. So
we won't even mention his name.
No, we can't. Well, we can't without being quite ill. So, but I think it's the same when our club had the same thing with the lady who went on the pitch and was very badly treated, and she put in a claim for
physio. Against Mourinho.
Eva Carneiro, and she won her case, and things had to change at the club because of that. So. The change that some United fans want might actually happen, but maybe a bit quicker than the club actually wanted things to move. We'll see.
Yeah,
we'll see.
To be honest, it's a sad situation, purely because he's such a brilliant footballer, and it's a terrible way to...
Well,
I don't believe for 1 minute he's ending his career. I believe he will go on and play for somebody else, possibly in the best interest of him, his own sanity, and the club. It would be better if we parted company at this stage.
One would think so,
because take away from the brilliance of him over the years.
Exactly, and I'll also add to that the thing we don't know exactly what's gone on, but we do know, which a lot of us will have actually ignored, he's had a horrific personal trauma in the last few months.
True.
He lost a child, and we're all humans. And when things go wrong for us personally, when we're shown not to be the heroic, cast iron warriors that people think we are. So I'm not saying I feel sorry for him, but I feel sorry for absolutely anybody that has to go through that. And if he actually feels he didn't get the support of his employer during that trauma, then he has got a case.
Well, that's to be honest. There's been so many things during the course of this where I always knew how fascinating you were to talk to, but obviously many of the listeners are probably seeing and hearing you for the first time. We should have you on again, because I swore blind after I had the Karen Young interview, which took 65 minutes, that we would finish this in 45 minutes, and we have failed.
Okay, well,
but we have failed. We have failed in a good way, because you've reminded me of so many things that I've been meaning to say to people or have highlighted for people. So let's just sum it up in the last 60 seconds. First of all, give them the key takeaways as a person.
Okay. So, number one, review what you've already purchased. Number two, concentrate on business continuity, but put it back into your own terms. What is going to cause my business the biggest problems? What three things are going to really stop us from doing what we do on a day-to-day basis? And then the final one is, once you've managed to do that, you might put in a business continuity plan, but you might be able to swap old insurance for new insurance that is more reflective of what you're currently doing as a business. So those three things, if you forget everything else we've talked about, if you review what you've got, you concentrate on keeping your business continuous, and you swap insurances you don't need, I think that will help you not only maybe get better costs, but definitely better benefits, but definitely make your business more resilient to what's actually going to happen out there.
Okay. And for me, it was definitely read the documents. It was even, check out the laptop connection here at home, make sure I have the VPN, make sure I change the Wi-Fi code. and actually go back and tackle my insurer, but also use an expert like yourself to prod me into thinking about this in the right way. So there's loads in there, Jason, and I'm sure when we air this, someone will come back to me and say, would you focus on this piece before we have the power cuts at the end of January? So just remind them what you said, that there's no insurance for this. They have to prepare.
Yep, there's no insurance for power cuts that are planned, and that's what these are. Yep. But you can make yourself more resilient. You can find out what power you need and go and hire some temporary power. If you're reliant on water, make sure you've got water tankers, and then the list goes on. Hopefully, there'll only be one or two things that you might need to think about. And therefore, the big picture of, oh no, this is too big a problem to think about, you can shrink it all the way down to give yourself some key takeaways, key things to concentrate on. The rest will all be fine. It's just the key things that are going to keep you going. Make sure you've got those and you've got access to them when you need them before everyone else decides to go out and get them.
Yeah, and that's the critical thing to any CFO, finance leader listening to this. Have your plans in place, road test them, and make sure that you're in the queue to get what you need critically by the end of January. So absolutely fantastic talking to you. Some brilliant stuff there. We could probably do a half an hour separately on Ronaldo. We might wait on the results.
Yeah, well, we'll do that in person when we get the chance.
We'll get you. I'm determined to get this into a TV studio. When we get into the TV studio, we'll discuss Ronaldo as well as business continuity plans. For the benefit of everybody watching and listening back home, don't forget, obviously, this is available on YouTube. You can look up our YouTube channel, which is called Finance Transformation UK, and find all the interviews. You can also find the leaders interview with Michael Ryan, with Karen Young, and with Jason Cobine. You can find them on Spotify or wherever you listen to your podcast. It's also available on Audible, for example. The third interviewee will be a lady called Rebecca Howard, who heads supplier engagement at Coventry Building Society. And I should be talking to Rebecca during the course of this week. And we've quite a few topics, so I'm not going to let you know what they are in advance. I'm going to hopefully try and finish it in less than 50 minutes. So for the benefit of everybody watching and everybody listening, thank you very much. Thank you very much to Jason for coming in. I knew he had gold dust to share, and we need to share this out as far and wide as possible. Thank you all for listening, and I'll see you all in the next episode. Thank you.
Thanks, Michael. Take care.
Okay. So we pause at this stage because we may need, so as far as the screen is concerned, Martin, you can consider this as finished. There's an upload part that needs to take place, and we need to make sure that takes place, for which reason you may need to leave your machine on. So just let me try and get hold of him. I may need to just give him a second in case he's talking to somebody else. How did you find that?
Yeah, fine.
Yeah.
So thank you, because you make it easy. And yeah,
well, to be honest, I've always known what you were, and the same situation happened with Karen. Probably it takes 10 minutes to get into the swing of you're talking about what you want to talk about and what naturally flows. And so that's why I frequently came back to, okay, so the takeaway for me is this, the takeaway for me, which might have sounded a bit